just thinking about the Strait of Hormuz continue to be closed, right? And what I'm hearing is that, from guests that we interview like Luke Broman, Lynn Alden and such, like, the longer this happens, right, the more damage that's going to be caused to the global economy and such. And it's still closed. And like we still haven't come up with a deal. Every day is passing by, days are passing by. I think we're over a month and a half into this conflict, almost going on a month and a half and such. And so just curious in your thoughts on obviously you're parked in some cash. Do you think there's risk for further downside?
I feel like we're fairly sheltered at this point. Like a lot of selling has happened. Of course, if gold dips down to $3,500 again, which I don't see happening personally, I think we're okay when it comes to the share prices. Of course, panic selling, liquidity raising could happen again, but that would also mean that the broader stock market would have to show much more weakness than it has. Like it has been very solid. The S&P is up 2.5% this morning, I believe. It's back up to 6750. Last I checked, right around there. So it is a constructive environment for all markets right now. But coming back to the Strait of Hormuz, the first ships are sailing through it. So we've seen 12 ships or so go through it. I was following Hormuz. I think there's an X account called Hormuz Tracker that sort of shows who's going through it. And again, I haven't verified any of it. I cannot verify it. I don't have my own satellite to check who's going through the Hormuz Strait here. But that's very positive. That's why the oil price is under such pressure, because it is open. Right. So it is flowing. The question is, will that hold? That's the big question. And we don't know, quite honestly. There's so many uncertainties. Based on the information we have right now, I'm really constructive on the stocks, especially the gold and silver mining stocks. And we've seen silver stocks react very positively this morning. So I'm really, really bullish when it comes to that. But again, there is that caveat. If anything happens, if one of the ships gets attacked, anything like I wouldn't say it's game over. That's the wrong term. But the floodgates might open again, and the U.S. already said, "Hey, we're standing by. We're not moving anything out of the region. We're standing by. We're waiting to see what is happening." And then, of course, you got the neighbors, Saudi Arabia, United Arab Emirates. They're ready to go against Iran as well if they get attacked more. And Iran already says, like, hey, if you start attacking like civilian infrastructure, meaning desalination plants or anything else, power plants, then we retaliate with much more force. Not sure if they can. I'm not a military expert. Not sure what that might look like, but those are the unknowns, and it's really difficult. So I'm really happy with the 12% cash position. Next week, I might put it all back into the market. We're a long only mining equity fund here at Commodities. So we might go long and have maybe 2-3% cash left and add to the existing positions, maybe add a few. But that really needs to, the environment needs to show me a bit more at this point. And 12 ships sailing through it is a good sign. And I think we're headed the right direction. I don't want to be overly pessimistic here. I'm just being cautious. I'm working with other people's money here. So I got to value my choices here. And 12% cash is actually not that much if you look at it. So we're being cautious, but positive.
Yeah, I was recently watching a clip of Warren Buffett, who was interviewed, and the interviewer was asking him like, "Oh, we've seen like a correction in the market, the S&P and everything's in correction territory." And Warren Buffett was saying like, "Well, he's seen the S&P correct 21% in a day." So he's like, "Yeah, this is nothing," and we know that Berkshire was sitting on a lot of cash. They're still sitting on a lot of cash and such. And so it seems like there's some folks that are more like, okay, we could see some further conflict and we don't want to deploy all of our capital yet. Some people are waiting for some confirmation out of this particular situation before they are willing to jump back in. And then you do have some people that are still in the markets that are getting experiencing a lot of the carnage right now. And so I'm curious in your perspective on what confirmations are you looking for? So obviously, when you have the ships that have passed through today, that's a part of confirmation, right? What will help you feel more confident that this is something that you're ready to deploy some of this capital back into the markets?
No, I think a proper peace deal, of course, always helps. Like a solid peace deal that's verified by a third party, right? Not just one Truth Social account versus one X account saying we're doing this versus we're doing that. Because I honestly don't know who to believe. I'm not sure to believe the U.S. because they're declaring victory. Iran is declaring victory. Not sure who's the winner, real winner here. Because right now I'm only seeing a lot of losers personally. But we'll have to figure this out. There's going to be a long rat tail. It won't be over tomorrow. Right. Even like we just discussed, the Strait of Hormuz is open now, but there's a long lag effect behind this. Like we haven't talked fertilizer or anything. I'm not an expert in that segment, but a lot of issues that are still existing that will take a while. Petroleum reserves need to be refilled. Jet prices, like Delta gave some guidance this morning that was fairly, I would say, on the negative side because jet fuel prices are much higher. Southeast Asia will take forever to replenish and have enough access capacity again. It takes a while for the ships to sail through the Strait of Hormuz and get to Singapore, right, and replenish those storage facilities. Australia, other issues as well that are waiting. It'll take 2-3 weeks for the market maybe to realize, okay, this is. We're good here now. Any further disruption could cause a massive upset here. I think we might have dodged the proverbial bullet here with a peace deal or ceasefire right now, because if this would have gone on any longer, the world might have been in real trouble. We've already seen people lining up at gas stations across Southeast Asia, and we've been having discussions with friends that are traveling. Like it's Easter break for us in Germany, and I'm traveling right now as well, as you can tell. But a lot of my friends went to Thailand and Singapore for Southeast Asia just for some warmer weather for travels, and we were discussing like, can you even come back? Right? Is that going to be an issue? And that was something that we've discussed only 10 days ago. Right? That hasn't really disappeared just yet. It's very fragile. And all those effects, and we haven't even talked about inflation expectations in the US. We get CPI numbers this Friday. OECD, I think, made inflation forecasts for the US of around 4.2% for the year, which seemed to be okay. Core CPI, I just spoke with Michael Leibowitz, and he's made an emphasis on core CPI, which excludes food and energy, seems to be steady. But the overall effect, like the lag effect, meaning, okay, you got to pay now $6 a gallon or so for gas in the U.S. I'm not sure what the average is. I was just in Seattle at the airport. It was $6.40 a gallon. The second you leave that Seattle urban, the metropolitan area, it gets a little cheaper. But let's say $5.50 a gallon. A lot of people cannot afford higher gas prices because they live paycheck to paycheck anyway. So having to pay an extra $20 or $30 to fill up your truck is actually a lot of money. Right. And it was really highlighted to me, and I make that anecdote in other interviews over the years. But I was in Idaho at a hot spring like years ago, and there was somebody sitting next to me from Salt Lake City, and he was a refrigerator repair salesman. We were just chatting, and he told me, it's like, I can actually make this trip because gas has gotten so much cheaper. Right. And it was a 300-400 mile drive, a 300-mile drive or something from Salt Lake. So that just tells you how fragile the U.S. consumer is, perhaps, as well, and that we're only seeing that now. Those the higher costs get reflected elsewhere. Maybe travel spending. So if you have to spend $50 more to go 300 miles, maybe you're going to stay at a Motel 6 instead of the Hilton. Right, and I'm making extreme examples here, but you'll see that maybe people will go less to the movies less. They'll rely more on their Netflix subscription. Maybe they'll go out to dinner less. Maybe you should short Olive Garden or something, right? For the next 6 months, right? Or those are the effects on the main market that we're watching right now as well, and that'll take time to digest. So it's really interesting now because we're at the beginning of earnings season. All those companies, like even an Olive Garden, and we'll say, hey, this is what our outlook for the rest of the year is. This is what we're expecting. Maybe they're already seeing a slowdown. I don't know, because they haven't come out with those numbers yet. But that's something we'll be watching because that'll dictate sort of what do you call it, the direction of the main markets, I believe, over the next few months before we hear anything else. Of course, if the Fed starts countering that, and that's the other thing as well, because we get a new Fed president in May, theoretically, because he hasn't been confirmed yet. If the Fed starts cutting rates, for example, maybe surprise 50 basis point cut, and again, I'm just making things up here, just theoretical, then of course the market will probably be exuberant because then all of a sudden risk off and we're all going straight back into the market, and we'll see 70 to 100 points in the S&P probably next week. Okay. So there's a whole whole tail, like the butterfly effect, like the ripples are massive. Like it's a big rock you throw into that pond, and those ripples, like it's difficult to grasp, but it's not going to, the ripples don't stop with the first one. right? There's going to be massive effects.